Successful investors play the long game. The real mental edge in investing comes from resisting the urge for quick wins. Markets move up and down daily, but wealth is built over the years. By focusing on long-term growth, you ride out short-term volatility and avoid emotional decisions. Long-term thinking allows you to harness compound growth, where your money earns interest on both the principal and the accumulated gains. Patience is not just a virtue, it's a profit strategy. This mindset turns market dips into opportunities instead of panic triggers. The investor who sees decades ahead is the one who wins. Your emotions can be your biggest enemy. Fear and greed are the twin forces that ruin investment decisions. Fear makes you sell too soon, and greed tempts you to take risky bets. A strong mental edge means sticking to your investment plan regardless of headlines or market hype. Staying calm during market drops allows you to buy when others are selling. Emotional control keeps you consistent, disciplined, and focused on your financial goals. Markets reward the steady, not the reactive. The best investors know that discipline is more valuable than prediction. Control your emotions, and you control your returns. Knowledge is your first investment. The smartest investors spend years learning about markets, assets, and economic trends before risking big money. They study patterns, research companies, and understand how global events affect prices. This knowledge prevents costly mistakes and helps them spot opportunities others miss. Investing without knowledge is gambling. Investing with knowledge is strategy. The mental edge here is curiosity and continuous learning, because markets are always changing. The more you know, the more confident and profitable your decisions become. Your mind is your most valuable investment tool. The market changes, and so must you. The mental edge isn't about predicting the future. It's about adapting when it arrives. Investors who cling to outdated strategies get left behind. By staying flexible, you can shift between stocks, bonds, real estate, or even emerging opportunities like crypto when conditions change. Adaptability means balancing risk with reward while protecting your capital. Rigid investors break. Adaptable investors thrive. The market is a living system, and your strategy must evolve with it. Change is not a threat. It's an opportunity. Consistency beats intensity in the investment game. Many investors start strong but lose focus after a few wins or losses. The mental edge comes from showing up month after month, year after year, no matter what. Setting automatic investments ensures steady growth without emotional interference. Reinvesting dividends, reviewing portfolios, and sticking to your plan compound success over time. Wealth isn't built in one lucky trade, it's built in hundreds of disciplined decisions. Your consistency becomes your shield against market noise and your engine for long-term financial freedom. Discipline is the bridge between strategy and success. Great investors don't fear risk, they manage it. The mental edge lies in understanding that every investment carries some level of uncertainty. Instead of avoiding risk altogether, smart investors assess it, plan for it, and use it to their advantage. They diversify across asset classes, hedge against market swings, and never put all their money into one opportunity. Risk, when managed well, becomes a stepping stone to higher returns. The goal is not zero risk, it's controlled, calculated risk. The difference between gambling and investing is strategy, and that's where your mental strength makes the biggest impact. Every market move becomes a lesson, sharpening your skills for the next decision. True mastery comes from embracing uncertainty with confidence. Time in the market beats timing the market. Many beginners obsess over finding the perfect moment to invest, but pros know it's nearly impossible to time the market consistently. Instead, They focus on staying invested long enough for compounding to work its magic. Even average investments can grow into fortunes if given enough time. The mental edge here is patience, resisting the temptation to constantly jump in and out. By prioritizing time over timing, you allow your portfolio to weather storms and grow steadily, turning years into wealth. It's the quiet power of consistency, not the thrill of quick wins, that builds lasting empires. Your money works hardest when you give it the time to breathe. Buy a business, not just a stock. The most successful investors treat every purchase like they're becoming part owners of the company. They look beyond short-term price movements to evaluate leadership quality, financial health, and long-term growth potential. This mindset shift keeps you focused on the real value of your investments, not just their current price tag. When you think like an owner, you care about sustainable growth, not quick flips. The mental edge here is commitment to your research, your companies, and your future. Ownership creates accountability, pushing you to make smarter, long-term decisions. And in the end, that patience often pays the biggest dividends. Making money matters, but keeping it matters more. The best investors follow a simple rule: don't lose money. Protecting your capital is the foundation of long-term investing success. This means avoiding over-leveraging, staying diversified, and not chasing risky trends without proper research. Capital preservation gives you the freedom to take advantage of future opportunities without recovering from past mistakes. The mental edge is knowing when to say no to bad investments, even if they look tempting. In investing, defense is as important as offense. By securing your base, you create the stability to build bigger wins later. Results are the byproduct of a solid process. Many investors obsess over their portfolio's current value, but the real focus should be on the investment strategy itself. The mental edge here is trusting your process through both market highs and lows. You can't control every outcome, but you can control your research, your discipline, and your decision-making framework. The right process leads to the right results over time. By improving your methods and staying consistent, you build a level of confidence that no market swing can shake. It's about playing the long game, knowing that steady steps will carry you further than reckless sprints. Patience, after all, is the sharpest investment tool you have. Your emotions are the market's favorite target. Successful investors know how to separate feelings from facts. Markets will rise and fall, sometimes violently, and emotional reactions can lead to impulsive, costly decisions. Fear makes you sell too soon, and greed makes you buy too high. The mental edge here is developing emotional discipline, staying calm in panic, and rational in euphoria. This doesn't mean ignoring your instincts, but balancing them with logic and strategy. Detach your self-worth from short-term results and focus on long-term growth. When emotions fade and reason takes over, your portfolio will thank you. Remember, markets don't reward emotions, they reward patience. Train your mind to respond, not react, and your wealth will grow steadily. Every loss is tuition in the school of investing. Even the greatest investors make mistakes. They just don't repeat them. The mental edge is in analyzing losses, identifying what went wrong, and adjusting your strategy without emotional baggage. Regret traps you in the past. Learning moves you forward. Losses reveal weaknesses in your approach, giving you a chance to strengthen them. By treating setbacks as lessons instead of failures, you build resilience and adaptability. Every trade becomes a step toward mastery, whether it was a win or a loss. The goal isn't perfection, it's continuous improvement. One great lesson can save you from 100 future mistakes. Your losses are expensive, so make sure they're worth the price you paid.